Thanks all for joining us today. My name's Owen O'Connor. I'm a business development manager here with Swoop. I work with accountants every day to help them get the best use out of their Swoop subscription. But I like to work on a consultative basis and provide expertise and insights to really help accountants grow their advisory services. So I'm joined by my colleagues Chris Roxburgh and Swoop's co-founder and CEO Kieran Burke. Chris, do you want to introduce yourself first and kind of just explain how you work with advisors and accountants?
Hi everyone, I'm Chris. Previous experience been working in NatWest and RBS, been dealing with small business funding and small businesses and accountants for about 12 years now. Day to day I lead the channel, so anything that I can do to help that advisory level conversations, anything to do with pre-approvals, anything to make businesses' life a little bit easier, making advisor lives easier, that's what our bread and butter is. And yeah, looking forward to this today. Kieran?
As Owen alluded to, co-founder of Swoop, so have been dealing with funding quite a bit since we started the business. So now we've got, I think, over 300,000 businesses on Swoop and an advisory network in the UK. I believe about 213 practices. So I've definitely seen a fair share of different funding scenarios and requests. So hopefully you can kind of add a bit of value there. Also, personally speaking, through Swoop have raised finance through grants, equity and lending over 25 million. So again, from a personal perspective, can talk a lot into those instruments and why we went for various different funding types. And so hopefully you can kind of give some nuggets and insights on that side too.
Brilliant. Well, look, Chris, I'll let you fire away, just explain a little bit about Swoop with these slides.
Perfect, thank you both. Leah, do you want on to the next slide if you don't mind? So Swoop is a total finance platform, so essential to every single business to see what's available. So we can give you access to this platform. So we give you access to two platforms, an internal CRM system and your own co-branded self-serve system for customers. So every time a client goes on to your portal or gets added to the Swoop system, they've got access to numerous different things. So at the top, they've got access to all types of funding. Back when I was in the bank, we only really seen overdrafts, loans and invoice finance and potentially some finance for cars. That's totally changed now. So if a client is looking for funding, it can be broken down into numerous different ways. So if it's a 50 grand lend, it can be broken down to asset finance. We're doing a lot of tax funding at the moment, and that could be even acquisitions, it could be franchising, it can be working capital, revolving credit. So there's numerous different ways that we can help. And we'll go on more about the funding aspect, but there's tons of pre-approvals that we can do as well, which means we're not hard scoring the business, but telling you, the accountant, what's available. So we can do that on term loans, working capital, revolving credit, invoice finance. So you can have that conversation with the client to see everything that's available. We also have about 300 odd investors that sit on our panel as well. All we need is a pitch deck that gets sent through to our system. That goes from high net worth to VCs to family offices that we can potentially have a look at. We have an R&D team within Swoop that sits internally within Swoop. So if you don't deal with R&D but your clients are asking about it, feel free to send them over as well. We also do a lot of work with the Innovate grants, and we've also got a grant finder that sits within the portal that can look at national, local, government, council, sector-based grants. Everybody knows looking for grants is an absolute nightmare, and if you definitely go for one, searching for Google, you're definitely spending a few wee whiles going down the rabbit hole, but Swoop brings that all into one place. And very passionate about either making clients money or saving. So we can do bank accounts, savings accounts, credit reports, utility bill comparisons, insurance, FX, pensions. So when I talk about a full business finance platform, Swoop can do it all. So as soon as that client logs in, they're able to see everything that's available and helps your advisory-led conversations as well. Leah, do you want to just nip onto the next slide, please? So when you can kind of come on board as an advisory or an introducer, we're very, very supportive on kind of supporting your practice and supporting your clients. So you'll get a specific point of contact within Swoop. So any client that comes over, we're able to have our first point of contact to see how we can help. We can help you maximise your advisory offering, how to maximise return of investment. Just to kind of put it in perspective, we do give you commission back on any loans or any finance options that can be up to about £400 on average, which is not too bad. I always say if we can help your clients, it makes you look really good and turns Swoop into a little revenue stream for you as well. We do a ton of marketing help as well, so we can tailor-made marketing campaigns, we do co-branded assets, we can help you on your website, and we can kind of give you that digital marketing assistance as well. But we also can do a lot of tailor-made work as well. So insight reports just showing everything that's available from grants for funding, credit safe reports, and we can actually do VAT, self-assessment and corporation tax calculators as well, which gives you an instant pre-approval on rate, monthly payment, and how much would be over the total term of the facility as well. But in summary, it's a full picture, full help that we can offer, and we're very, very keen to kind of support your practice and your clients as much as possible.
That's why you're the sales guy, Chris. That's brilliant. And yeah, just to dive, I guess, more into Swoop and why we're here, I guess, is the kind of cash flow issues that a lot of clients are facing come January. So in terms of both for both of you guys to begin the year, how has January been? Obviously for a lot of the accountants, it's been absolutely hectic. So what's Swoop kind of seeing this month, and what are the insights we can give?
Yeah, or Chris, do you want to dive in, or I can dive in?
Go for it, Karen, you go for it.
Yeah, I can speak, I suppose, a little bit into business owners and a little bit into the accountant side of things. I think overwhelmingly, accountants seem to be taken up by self-assessment just by the nature of the January 31st deadline. So that's scrambling to make sure everything's in place for their clients so that those self-assessment tax bills can be given in by the deadline. As such, that kind of creates an issue around cash flow. Lots of those business owners maybe haven't stayed on top of the size of that amount, or the lump sum that has to be done away or sent through to HMRC. So as such, a lot of them are turning to self-assessment funding, where they can have the bill funded and they can spread the cost of that bill over kind of a 6, 10 or 12-month period, depending on their preference. So we're seeing definitely a lot of activity in that space, both from accountants and business owners. I think generally speaking, also business owners sometimes can get a bit stumped in January around the VAT side of things. A lot of seasonal businesses do their best business in the previous quarter, the October to December period. You have a lot of big kind of strong wins in your favor if you're in things like retail, hospitality with big trading periods. As such, your VAT bill can sometimes be larger than expected. So again, can add cash flow issues whereby January to March mightn't be your best trading month. So again, we see business owners looking to spread that. I think also a lot of businesses are using software more and more these days. Like personally speaking, within Swoop, we've some big software bills, whether it's our kind of voice activation software or CRM software. And they're chunky bills, and a lot of the time they'll look for the cash up front. So say take something like Aircall, which is in the software we use to make calls, costs about 22, 23 grand a year. Never enjoy January, have to pay that bill all in one go. So this year we're actually switching provider so that I can manage the payments better. So I can do it in a quarterly basis. So that's not going to be unique to any business owners. We increasingly have large capex on software, and so a lot of those bigger software companies demand payment all up front. So again, it's a big thing we see in January. So personally speaking, that's something that I definitely was feel. I don't know, Chris, anything different from your side?
No, I just feel like a lot of businesses now, they're kind of maybe started in COVID and they're up to that point now where they grow to a specific point where they've not really got much to show for it, but they feel like they've won a contract, they're starting to come on board, they want to take on a member of staff, but they've not got the cash for it, and they think they're probably in that point where they question to say, well, I think my business is doing really well, should be doing really well, but I've not got the cash flow to show that it's doing really well. So it's not a bad thing for funding. I don't think there's a myth, or Kieran, you'll probably know that, there's probably a myth about if I'm taking out funding, something's went wrong. Whereas I think people could be a lot smarter, especially with the funding products that are now offering. which I'm sure we'll probably go into. So it's kind of that business crossroads.
Yeah, I think a prime example for that is even taking myself, or example, when we were growing the business, we were buying every single laptop, piece of machinery, equipment, and I can't remember who said it to me, but it was about 2.5 years in. It's like, it's the best way of doing this, and it's just like, it was just pure ignorance. Didn't think about it, despite being working in funding, surrounded by funding the whole time. And all of a sudden, we just like ran the numbers, have a situation where we're leasing everything, we're cycling the equipment, we're not building things up. Although that being said, there's quite a large number in the London office that do need to go back. But it's just sometimes taking a pause and thinking about all of your expenditure and how you wish to do that. Like for me, leasing around certain pieces of machinery made way more sense for cash flow than going and constantly buying new ones.
Chris, just on that, in terms of what Kieran's saying, as a business owner, you're obviously speaking to accountants every day. Like, how well placed do you think accountants are to have those types of conversations around cash flow, or to open up those options, whatever type of finance that might be, particularly at this time of year as well?
My famous phrase, you don't know what you don't know. So if they don't know what availability outcomes are there for their clients, they can't actually like advise on them. So they probably just still think overdrafts, invoice finance is the way, but you've got working capital, you've got supplier finance, you've got revolving credit, all very cheap ways to do it. And if you don't use them, you don't get the charge for them. So it's up to us to kind of educate and say, like, this is actually available for the client, and putting that piece forward as well. Just another one as well, acquisitions seem to be quite a topic of conversation at the moment. It used to be a case where big companies used to buy smaller, but we're starting to see a lot of, when I say smaller companies compared to before, are looking to acquire other companies as well. I've never really seen that before, which is a new one. But yeah, again, acquisition finance is massive, but again, it's up to us to have the conversations to say, like, this is actually available, and can you put it in a way that is easy to understand in simple terms, to say, this is what it is, this is what it costs, and this is the actual benefit of it as well.
And both of you have kind of touched on the tax piece, and obviously with January, it's such a key month, particularly for accountants, and it's probably the biggest headache that they'll have. But a lot of accountants might not even be aware of the tax kind of products that are out there to help clients with their cash flow funding at this time of year. Like what's available if, say, for example, I'm struggling to pay for my VAT, and how does that kind of, that funding product be structured for a client? How does that work?
Yeah, I can dig in the VAT. You can take the corporate tax one if you want, Chris. So the VAT one, definitely seeing a kind of rise in popularity for it. There's a couple of reasons for that. And kind of as I was alluding to, different quarters mean different things to business owners. We don't all have like the same revenue, same costs going through each quarter. So as such, when you have like high activity, naturally you're probably going to have a higher VAT bill in the next quarter, but you might not have as corresponding good cash flow. So sometimes the hit in terms of having to pay that VAT in one go can be quite impactful from the business owner's perspective. So maybe inhibiting them from growing, or thinking differently about making that higher, or doing some marketing, what have you. But what VAT funding allows them to do is have that bill paid but spread it over a 3-month period, so that they're not having to pay it all in one go. The other big thing to note here is, naturally that's going to come with an interest payment on top, so the total amount is going to be larger than if you would have paid for it in one go. That being said, if you're a profitable business, you're either going to be paying either 19% or 25% corporation tax, depending whether you fall below or above the 50 grand profit mark. But those interest payments can come off your corporation tax bill. So it truly can be an instrument just to really improve your cash flow at the end of the day. So would you rather pay it in installments ultimately, or in one go? And so as business owners start to realize this, more and more of them opt to do so. Now, the government obviously had a lot of time to pay schemes to help business owners struggling with this. The downside on the time to pay is when you get registered for that, and you want to go for additional lending or a loan with any other things, that is marked on your credit file. So what then happens is it acts as a detractor for other forms of funding, and the government have also increased the cost of time to pay. So the difference between classic VAT funding and time to pay, there's not really a difference on the cost side, but the big difference is the impact that will have from a negative standpoint on your credit file, which is why business owners tend to look at that VAT option over the time to pay option. But yeah, a good way to kind of manage cash flow is probably the best way to summarize it.
Yeah, just to kind of say what we can give you as well, we've got 3 calculators, a VAT, self-assessment and a corporation tax. For limited companies, all they need to do is just input their company's house number and the term that they want to do it. So VAT, you can have it over 3 months, and self-assessment and corporation tax, you can have it over 12 months. With one specific lender, there's no PGs under 120 grand as well. Put that in the calculator and that gives you an instant pre-approval on rate, amount and amount done as well. So that'll take in your business credit score and give you an accurate rate as well. If that's something that you want to go ahead with, we can just pick that up, and it's a relatively simple process to get that in place. But we can co-brand it, we can make it, but what we've seen a lot of success with is if you are going out with communications about VAT bills, and it's usually, you would have, if you're struggling to pay your VAT bill, there's a time to pay option. What we've seen a lot of practices doing now that's having a lot of success, if you want to fund this over 3 months, there's a funding solution, and that's linked directly to the calculator, which we've seen a lot of bit of success with as well.
And sorry, yeah, that's a good point to re-emphasize, is the security bit. So business owners and accountants will get this from their clients. Naturally, don't love having to sign personal guarantees. Naturally, would rather to do it without security. So that the fact that you can get VAT funding for 150,000 or less without a PG is definitely something for accountants to be aware of, because timing, one of the first questions out of a client's mouth, or one of the first points they'll make, is they don't want to sign a PG, and it's absolutely fair enough, but it's definitely something it's worth flagging with this particular product.
And just generally, I guess, at this time of year as well, like Chris, when you're going out speaking to accountants, what are kind of the trigger points you're saying to them that they might see in the P&L or the balance sheet that would, indicate that a client might benefit from a funding conversation? What are kind of key things that they should be looking out for?
It's not anything in the accounts as such, it's just little hints to say, my client's won this, or my client's been really struggling to pay this, or they depleted the cash reserves. That's usually the kind of pick-up point. So if something's changed within the business, that's usually a point to say. And one of the first conversations I always have with a business is, what have you got planned in the next 3, 6, 12 months? And usually it's about growth, as in, I want to do this, or I want to do that. Or we look at specific sectors that we know are kind of really struggling for cash flow, like construction, hospitality, retail, manufacturing, e-commerce, for example. It's usually just picking up that point to say, what have you got planned? And then usually it will kind of lead into an opportunity. Kieran, you'll know this as well.
Yeah, there's a couple of different things. Is like, where is there tension in the business that cash flow can help or funding can help? So one thing the accountant might pick up on is the debtor days. So how long is it taking you to collect cash? So you might be booking all this money on the revenue within the account, but actually when we look at the cash in, it's taking you a long time to do that. And if we can see that debtor days is increasing and the trade debtors line is increasing as well on the balance sheet, then we know sales are increasing, you're getting more customers, that's a good thing, but the time it's taking you for collect that cash is increasing. So in that instance, asking some questions around how is that affecting the cash flow, and would you want to try and advance that cash more quickly, so you're reducing the debtor days and you're getting cash more quickly into the business. So it could be looking at a selective invoice finance, whether there's one particular invoice that you're waiting on time and time again, or it's looking at the whole book, and maybe you want to just constantly have that invoice facility in place so that you're consistently able to draw against that. For businesses that might be again, seasonal stock is going to be so important in terms of the timing of when you order that and your ability to be able to sell and make hay. So we often see cases where businesses have had amazing October to December periods, but they could have been a lot better because they could only afford to get a certain amount of stock in place within the business. So again, looking at the balance sheet in terms of is there stock on there? Can you raise stock finance of that? But actually looking at their trading and how they're using kind of cash flow, and is there ways to get quick money into the business? So things like revolving credit facilities, so they know it's a bit like an overdraft, that rainy day fund that they can always tap into when they have those moments to execute on, or looking at merchant or revenue based financing. Again, I'm going to touch on the personal experience of buying all this electronics or machinery, and you can see the clues on the balance sheet. You can see our total fixed assets increasing. Is depreciation going up and up and up? Do you need to hold all these assets? Is there a leasing model that's going to help you unlock more funding, or you might own significant machinery or property where you can release equity from them, again knowing you can release equity from them should you come into a cash flow cycle. So yeah, there's going to be different clues across the accounts that you can ask certain questions, and underneath it, absolutely there's going to be things in place. One great cash flow unlocker that many innovation or science businesses may or may not be aware of is for those that are kind of doing the R&D tax credits. We've seen in the last couple of weeks in a couple of big facilities in this space whereby R&D tax advance, so where a business has successfully got from HMRC the R&D tax credit, they know there's a significant claim coming in year in, year out. So what we're able to do there is advance a large percentage of that cash into the business, so that they can use that cash a lot earlier. So yeah, plenty, a few different clues in there. It's just about asking the right questions.
Yeah, and I guess on that point about asking the right questions, and Chris, I'll come to you on this. But so I speak to accountants every day, and I know some of them are for the first time are coming to funding, and so there's a kind of a confidence piece in terms of like, is this my place to be asking those types of questions to my clients, or there's just a bit of a reticence around funding. So Chris, like, what do you see as the advisors and accountants that you work with that are kind of using Swoop to its full effect? What are the types of things that they're bringing up to their clients? How are they kind of structuring their conversations, and how do they really offer that to their clients?
It's probably just being really upfront and just asking, what can we do for your business? Would there anything make a difference? Is there anything planned? Would you need any funding? And just highlighting the opportunities in the accounts. And it's probably, I think, what you feel more confident when you know what you're talking about something, whereas we've built up that trust with a few advisors now that they know if they hand over a client, they're getting the best deals, trying to get the best rates. So it's built up that time over service, and we kind of just say, right, if we can introduce you to Swoop, this is what you can expect, and this is what we can actually do for the client as well. And this is why we're so pushing these pre-approvals, the VAT calculators, to build up that level of transparency to say this is what you're going to do. And I think as well, it's just, don't be afraid of that funding word, because you don't know. Ask the question. Yep, we've got a partner in Swoop that can pick up the phone and just talk you through your different options that you've got with your business as well.
Yeah, and just in terms of those pre-approvals, is there like a ideal client that we should be looking at, that accountants should be looking at in terms of turnover or specific areas?
Yeah, I would say anything turnover wise above 250,000 is a solid start for us to have a look to see exactly what's available. Especially if you're just new to Swoop as well, it's good for us to kind of focus in on a certain sector, as in if you've got 10 construction clients that you know have turnover 250, we can do a general analysis of each one and give you the options so you can have a conversation with the clients as well, or we can reach out to the clients and whatever you prefer as well.
Yeah, and then Kieran, just so to bring it back to Swoop, I guess, and as Chris has done there, but in terms of the reason that Swoop was created and to help advisors on that journey, how does Swoop really, in your words, add value to an accountant's advisory services and to their clients?
Yeah, I suppose clues in the name in one fell swoop. So what we really want to do is, by signing up once with Swoop, whether you're the business signing up directly or you're the advisor adding that business onto Swoop for the first time. We want to try to do everything in one fell swoop. So what that means is really showing them optionality across the board. So on the funding side of things, here's all the different lending elements. Equally, is there a grant out there that's going to be relevant to that business? Because actually potentially blending that cost of capital across the grant and the loan could be more value adding to the client and ultimately give them more bang for the buck. And in the same vein, if the business is high growth, capturing a large target market, or growing within a certain region within the UK where we know we have an active investor base, we also want to showcase them equity and show them the investors or VCs or family office that are interested in their particular business set because their numbers and their data are showing they're a good fit. The other element of that is we understand with any funding transaction, be it grant, equity, or lending, there's a tremendous amount of data exchange in terms of putting that application together, whether it's showcasing your forecast or your current financials. So as such, there's plenty of opportunities to give value back to that advisor for their client or to give back to the business themselves in terms of how we may save the money. Two of the biggest areas we're seeing in terms of money back in the business are in business energy and in business insurance. So with business energy, every individual business must negotiate their energy rate. So that means there's a huge variety in terms of the rates that businesses are paying. So as such, advisors can probably put tens of thousands in some cases back into a business on an annualized basis. So the way we've done this for accountants and businesses is as they're adding in bank accounts or accounts into Swoop, we're showcasing the amount that they're spending on an annualized basis. We're showing them when the renewal date is so they can get in touch kind of 7-8 weeks out, upload the energy bill, and then we can come back within 24 hours to showcase what the potential savings will be. We actually had an accountancy practice not too distant recently for their own practice save 13,600 across their annual bill across 4 of their offices. And then the same is very true of insurance. It's been an incredibly soft market in the insurance industry the last 2-3 years, which means for businesses that are kind of trading pretty much the same year in, year out, they should be expecting a kind of 10 to 20% reduction in their overall premium for things like general life, cyber, PI insurance. So again, same data set showcasing the vendor and when the renewal date so that the advisor can get in touch at the right time. Because let's face it, not everyone loves talking about insurance, but you're happy to talk about it when you've got your renewal and you can save significantly. So yeah, long answer, but in one fell swoop, try do a bit of everything to make them better run businesses.
Yeah, no, it's brilliant. And so Chris, just in terms of any accountants or advisors that are out there thinking, okay, January's nearly finished now, I've got a little bit more free time coming up in February, but also they might be worried that they for some of their clients that have kind of left it late. How quickly can Swoop kind of get some of that funding for their clients, particularly in tax, and what type of information is needed to really get the funding process going?
Yeah, so if you're looking for that, you'd be looking at last set of accounts, 6 months bank statements, a tax overview, and just the director's details would be the bare minimum that we need to kind of go forward with that. How quick it can happen, I would say probably within a week, probably a little bit faster if we've got all the information and there's nothing back from the underwriters. But yeah, it's a very quick process, and if we have all the information straight away, I mean, it can probably be done pretty fast.
And obviously accountants, want to make sure they have kind of like autonomy and are keeping control of the client relationship in terms of how you manage the advisory team and accountants. How do you kind of make sure that the accountant's still completely a part of that process?
Yeah, so every time a client's been added to the portal or there's a intrigue about the client or what's available, we'll always ask if you want us to reach out to the client or if you want us to speak through the advisor. So you've always got that control. Swoop will never contact the client unless we've given the authority to do so. So you retain that control at all times. You'll be CC'd in any offers and communications with that. So we've been very transparent about what's going on with the client and keep you updated at all times. I think that's one of the most important things. You don't want to lose that control or that trust, because it would be your reputation as well. So we're very, very clear on making sure everything's transparent and we're delivering on what we say that we can do. But also it's giving you all the information that we can give you to make sure that you know what's available as well. So as I said, if there is funding available, how can we present that to you so that you understand that as an advisor to then deliver that to the client? And we've got advisors that work both ways, as in we just deal with the accountant for them to deal with the client, or we can deal with the client directly. It's completely up to the advisor and we'll be led by the advisor. It's just us being as supportive as possible and delivering on what we can say that we can do. That's what I would can say in terms of control. We're not trying to take over control of your client base. It's to deliver as maximum service as we can to that client and to yourself as the advisor.
No, absolutely. And just, has there been any kind of like great success stories you've seen from kind of advisors that have referred clients in recent weeks in terms of the funding that they were able to receive, and how that process was also for you, Kieran, as well? Any kind of interesting examples that might resonate?
I would say one. I think it got done within 24 hours. It was a VAT bill that was looking to go for £12,000. We got a pre-approved revolving credit facility. Pre-approved pretty much straight away. So basically a revolving credit facility works, especially one of our providers, it's a working line of credit. So all they have to pay is a transaction fee, which was 3.99%. They can spread that over 3 months. So that means they would only have to pay a very, very short amount of interest. And that was done within 24 hours. So advisor made the client aware that we'd be in contact. We got all the details, reached out to the client directly, and that facility was there in place within 24 hours. As easy as that, and that means they've got a line of credit available for tax, wages, materials, stock, and they can just use that pretty much straight away. So I don't think you're going to get much better than a 24-hour turnaround.
It almost sounds too good to be true.
I know.
Yeah, I suppose I can chat into a few advisor ones in recent weeks. Like, I think we always pride ourselves on speed. So yeah, it is cool to be able to showcase those 24, 48 hour type stories. But equally, we're seeing we can be really additive on things like price and flexibility in other areas. One area advisors can sometimes get frustrated is if their clients are in Northern Ireland, they may not have as many options as they do as if they're in England, Wales, or Scotland. And kind of a recent case of this with one advisor, whereby there was 2 automotive businesses that had merged, and so the new business was kind of up and running about 3 months. It didn't have traditionally the trading history that a bank or alternative lender would need, but we obviously had the trading information on the previous one. So the advisor was only able to, at the time, get access to, I think it was about 9,000 for the client at 12 months on, let's say, about 50% type rate when you worked out annually, like some nosebleed type number. But actually, with working with some of the banks in the area, we were able to kind of look at the kind of wider picture of who the people were involved, previous success of the two businesses before merging, and kind of quickly turn around to be able to kind of present a 55,000 facility over a 7-year period at a 10.4% interest rate. So a big stark difference to what was on the table and what we were able to bring them, which was great to see. And I think the other one as well that I think has been nice to see, certainly for advisors, is the kind of use of the GGS scheme with a lot of acquisitions at the moment. So kind of, Owen, you touched on it, we're seeing a lot of accountants ask the questions around acquisition. It's increasing, like even accountants buying other accountants. And increasingly, people are using that growth guarantee scheme as a way of getting liquidity in to look at acquisitions. And we had one recently in the last couple of weeks where they were using it. But one of the reasons why the advisor really liked it was their client was really adamant they didn't want heavy security. They didn't want personal guarantees. Now, while the GGS product doesn't completely remove personal guarantees, it does limit it quite considerably. So in this case, they were able to have maximum exposure of 30% of whatever the capital allowance was, capital outstanding on the facility. So they were able to get the acquisition away low single digits, I think it was 6.75%, and reduce security on the PG side of things. So advisor and client really happy that we were able to give not just a good price, but flexibility around that security side of things. So there have been some of the kind of nice wins we've seen accountants get for their clients in the last couple of weeks.
Yeah, no, brilliant. Look, obviously everyone's busy, so I think just in terms of the key takeaways from this session, Chris, what would be your kind of key messages that you want to get across to advisors, and yeah, next steps in terms of working with Swoop?
Yeah, so if you are an accountant to practice and you use this lovely buzzword called advisory, or you're thinking about putting in advisory services, or you're making that transition over, obviously making tax digital, income tax is coming in soon as well, so it's probably a good time to transition. Or if you're really involved in the clients, reach out to us, reach out to myself, Kieran or Owen on LinkedIn. You can go to the Swoop website. You can also go to the Sage website and register up for a demo. And we can give you a look at the software as well. But if you think there's any benefit on helping your clients out with anything that we've talked about, from savings to funding, there's no obligation for cost or anything like that. We're really happy to help as many businesses as we can. So yeah, if you have the conversations, advisory led, or just going into the deep depths of it all when you're quite involved with the businesses that you look after, we can 100% add value to the conversation. So yeah, definitely worth a chat. Kieran?
Yeah, piggyback on that slightly. You are having conversations with your clients. You're going to be chatting to them maybe once a quarter or every other month. Add value. Your client will really appreciate it. Like, as business owners, we have negative time. So if someone's able to come and ask the right questions and show you options, they're going to be delighted and want to put more trust in you. That's why we created Swoop. So you can add those businesses in, pull their credit files, ask the questions, show them their options, show what grants are available, show what savings are available to them. So you're constantly adding value back into them. Your client's only going to be delighted.
I think that's a perfect way to finish up. Just thank everyone for coming alongside, and thanks very much to Sage for organising. As Chris said, if anyone wants to have a further chat around Swoop, yeah, please go to the website and you'll be directed to a link there, or you can email advisor@swoopfunding.com as well. But really appreciate everyone's time today, and thanks very much to Kieran and Chris for their time.
Thanks everyone.
Thanks everyone.